Oh, hello everyone. This is Chris from definedriskinvesting.com coming at you with another video. Before I begin, I want you to know that this video is not investment advice. It is purely for educational purposes. I'm filming this video on Saturday morning, February 12th, 2022 at about 11:30 a.m. And the purpose for this video is just to raise a little bit of a warning because I think this week we could be in for a very, very rocky week in the markets. And so I think I'm not saying to panic and sell everything, but it's time to do a lot of position management, possibly hedging some of your positions, possibly liquidating if they make sense to you. But we want to be really careful. And the purpose of this video is to show you why I feel that way. I'm not just saying that to be a fear monger. There is a good basis behind what I'm about to tell you. So on my screen right now is a 5-year chart of the spiders, the Standard and Poor 500 ETF Trust. So this is a ETF that trades at about 1/10 of the value of the SPX, which is the Standard and Poor 500 index. So looking at this, this is a 5-year chart, okay? And we can go back and take a look here. This right here is March of 2020, and this represents when COVID hit. So we were cruising along, nice upgrade, and then this is when the government announced the lockdowns, flights were canceled, and you can see this precipitous drop right around between the end of February and the mid part of March. But you can see then, once that was over, this index just skyrocketed at an astronomical rate. Once we realized the end of the world wasn't happening and people started to get on with their lives, you can see how this was almost a steady uptrend up until fall of last year. Now, part of the reason for this, right here where you see this spinning top, or I don't even know what to call that, right there, this is when the Federal Reserve stepped in and announced that they would be, for lack of a better word, supporting this market, that they would be buying bonds. Interest rates were obviously very low already, but they went to zero. They weren't going to charge. But basically, they propped up this market, pumped a ton of liquidity into it until fall of last year, when inflation started to rear its ugly head, and that they announced that they would begin what they call tapering, or turning back their purchase of these instruments, and that interest rate in 2022 was likely. So we dropped a little bit, went back up in November, and then once December hit and inflation spiraling out of control and the Fed starting to get more hawkish and hawkish, then this week, okay, I'm going to go down. I'm going to go to a 5-day chart here and just show you. So we were cruising along and things were actually picking up Monday, Tuesday, Wednesday, picking up. Fed meeting, or Fed started talking, and look what happened. Then, so that was Thursday, okay? That's the 10th. And then on Friday, we actually stabilized in the morning, but then in the afternoon, word got out about a possible conflict in the Ukraine and that Russia was possibly imminently going to invade, and look what happened. We ended up down about 2%, but we were up as high as 450, almost to 460, and we ended up closing at 440. That's a 2% drop in just, a few hours of trading. So then, late Friday, and over the meeting, the Board of Governors of the Federal Reserve System announced that on Monday, February 14th, 2022, at 11:30 a.m. Eastern Time, they are going to hold an emergency meeting to review and determination by the Board of Governors of the advanced and discount rates to be charged by the Federal Reserve banks. So what this means, up until now, let's just go back out to the 5-year chart. Interest rates announced, tapering ending. Everybody thought that the first interest rate increase was going to happen on or about the Fed meeting on March 14th. And the general consensus was that they were going to raise interest rates approximately 0.25 basis points. Okay, well, earlier this late last week, when the CPI inflation numbers came in, they were expecting about 7.2%. Well, they came in much higher than expected at 7.5%. So the rate was much, much higher than anybody anticipated, which meant that the likelihood was not only that they're for sure going to raise rates, but instead of just doing a 0.25% increase, they may lay a 0.5% interest rates on us in March. So the market started pricing that in, and then the Ukraine situation hit, and this announcement of this emergency Federal Reserve meeting on Monday. So what happened? This is a 5-year chart of the VIX, the volatility index, also referred to as, some people refer to it as the fear index. This is a 5-day chart, and you can see volatility was extremely low, and you can see what happened. It spiked up to almost 30. It came back down. This was as high as six points up on Friday at one time, once the conflict was announced, and then later in the day it slowly eased up into the close. But it was up, it closed up 14.5%. And volatility has a huge impact on the pricing of options. When this rate increases, so does the price of options. So if you, which is great if you sold the option, but if you bought the option and this volatility suddenly drops, your option value is going to be shrinking immensely. Let's go take a look at the Qs, which is the NASDAQ index. This is a 5-year, and you can see it's roughly the same as the S&P, only more pronounced because this is mostly tech stocks, and they tend to be more volatile. This is back in March of 20, okay, during COVID, and you can see it just about mirrors this uptrend. Yeah, a few drawdowns. Remember, we're going to see 2 to 5% drawdowns 3, maybe 4 times a year. Okay, this one was a little more dramatic. That was in fall of 21. And then you can see here we peaked somewhere around the end of November. Down, little rally, but since the beginning of the year, down, down, down. We hit a high of around 400. We're down roughly to what? Just below 350. We were down 11 points on Friday, which represented a 3.17% drop. But here's my fear. Okay, let's just see if I can go to the 5-day here. Actually, that's not what I want. Let me see the chart that I want. Let's just see if I can figure this out. 6 month. No, I'm going to have to go to a 1 year, I think. We closed at right around the 350 mark. Okay, no, 347.06. Okay, that's roughly where we closed. If we look at the chart, there is a little bit of support here at 340. Okay, but then look at between 340, it will drop down to 330, which is another 3 or so percent. But then below that, look out below. There is literally nothing. If we get down to the 320, 330 range, below that, if we get down below 311, look where the next support is, 270. So I mean, we're looking at some huge, if all you know what breaks loose next week and the crap hits the fan, we are in trouble on the NASDAQ. SPY, let's go out to the 5-year again. Here again, there's support down to 410, but then nothing down to 390, 380, and then look, 340. So, which would take us way back to October, pricing equal to October of 20. Okay, so a year and a half back, we'd lose everything. So, really, I need everyone this week to be extra careful. If you have a lot of open positions, I recommend hedging them with puts, buying puts. Other hedging methods you can find online. But please be proactive, because this meeting, now, are they going to announce a emergency rate increase on Monday? Who knows? But with the Ukraine situation intensifying and this, it's surely going to bring more volatility into the market. And I just don't see any positive catalysts that could drive this up, or that buyers are going to be real eager to get into the market and drive this thing up. If anything, we're going to have more selling pressure. People are going to get margin calls, which will exasperate the selling. It could get very, very ugly between now and March, the March FOMC meeting. So please, I recommend, please be very conscious and cautious. Sorry to be the bearer of bad news. This is Chris from Defined Risk Investing. If you liked the video, please hit the like button below and consider subscribing. Leave any comments below, and I will try to respond as soon as I can. Thanks so much.